Hello, I'm Shae Russell from ABC Bullion, and joining me today from the other side of the world is Trevor Raymond, from the Director of Research for the World Platinum Investment Council. Trevor, how are you today?
Well, thanks, Shae. Really good to be speaking to you.
Now, I'm super excited to be speaking to you today because we're going to be talking about a little known metal. Now, the metal that we are going to be discussing today is obviously platinum. Platinum has had a very exciting ride in the past couple of years. And before we get into the supply and demand factors and the positive future ahead for platinum, let's talk about what it is, because I'll guarantee there's not a lot of investors that even know what platinum is. So is platinum a commodity or is it a precious metal?
So, Shae, thanks. I mean, great place to start. I think platinum is traded as a commodity, but it's a combination of two things. Firstly, it is a precious metal, and secondly, it's an industrial metal. The reason it's precious is that if you look at platinum, feel it, it's heavier than gold. The only reason that it hasn't been around 3,000 years like gold is because of its very high melting point. It's only been able to be melted for just over 100 years. So the precious nature of it is recognized, and we certainly see that the price of platinum is highly correlated to the price of gold. And certainly as an investor in platinum, you need to be aware that the volatility of gold will reflect in the volatility of platinum. In addition, platinum is an incredible industrial metal. It has unique catalytic properties, which are really set it apart from the rest. It also has incredible physical properties, both strength and the temperature that I mentioned. So platinum, if you look at the last 50 years, has traded at a premium to gold. And that kind of makes sense. It's kind of just as precious, yet it does a whole lot of amazing things in industrial applications. So certainly, something that's precious, and gold investors that understand and know gold find it quite easy to look at platinum as also an uncorrelated asset. Obviously, we know that gold is the least correlated to everything, but certainly platinum's a very close second, and it has upside because of its industrial applications and some of the demand drivers that I'm sure that we'll touch on, Shae.
I look forward to getting those. And we will touch on the investment case for platinum towards the end of today's conversation. But first of all, actually, before we get onto the supply and demand factors, I do just touch on some two lesser known precious metals as well. And this is palladium and rhodium. Now, these are probably, even less people would know of these. Tell me, you've mentioned palladium and rhodium throughout some of the reports from the World Platinum Investment Council. Why do you touch on and cover these metals occasionally?
Sure. Thanks, Shae. I mean, to put things in context, so if we're just looking at the platinum market, it's about an 8 million ounce a year market. 6 million ounces comes from primary mining, and 2 million comes from recycling, mainly from the catalysts in vehicles when they reach the end of their life. So the interesting thing is that probably 80% of platinum is produced by mining it, and the other 20% comes as a byproduct, mainly as a byproduct from nickel mining in Russia and various other palladium deposits around the world. But in general, the primary ore body in Southern Africa that platinum is produced from also contains the 5 other platinum group metals, or PGMs as they're known. And the two most well-known are, as you mentioned, palladium and rhodium. And palladium is also an excellent catalyst, dominant in emissions control in gasoline vehicles. And rhodium is used also in auto catalysts and in a whole lot of industrial applications. So if you look at the platinum market being about an 8 million ounce market, palladium, you can argue, is a 10 or 12 million ounce market, and rhodium is a few 100,000 ounce market. So you've got rhodium being quite interesting, prices going to record levels, mainly because of its use in emissions control, in the massive growth in gasoline vehicles, particularly in China. And the reason we cover it is that the substitution between platinum and palladium is very, very relevant. You can, because a diesel engine is a low temperature engine, that's why platinum works particularly well and palladium doesn't, because sulfur poisons the palladium. So historically, platinum, palladium, and rhodium were used in the 70s and 80s in cleaning vehicle emissions. And then obviously the ability to switch platinum out of gasoline was because they could use palladium. And that's why you've ended up with gasoline engines using palladium, high temperature, and diesel engines using platinum, low temperature. But what we've seen recently is that the palladium price has significantly overshot that of platinum. We had a previous event in the year 2000 where the palladium price went to $1,000. Platinum was trading at around $600. And what happened is that there was a couple of million ounces that were substituted back out of palladium, and platinum replaced it. So we have seen this before. We saw rhodium go to $10,000 in the mid-noughties, and palladium was used to substitute out rhodium. So right now, the importance of platinum's demand growth rests on the ability for that substitution to occur. Technically, it's easy. They've done it many times. It's extremely confidential, and we just can't get our hands on information. So we talk about palladium so that people understand that palladium is nearly twice the price, or more than twice the price. It is a one-to-one substitute in gasoline. And although platinum has the advantage of being a very diverse demand base for demand segments, automotive, industrial, wide uses, jewelry, and investment, palladium is almost heavily dominated, more than 80%, just by automotive. So we try and give investors the understanding, and some of them obviously would own palladium, but certainly that dynamic between the two is very interesting right at the moment. I hope that sort of puts them into context, Shae.
Oh, it certainly does. So we will move on to where platinum and palladium is found. So you mentioned that obviously there's some that comes out of South Africa and some that comes out of Russia. So who are the dominant producers? Is there anyone, is the supply concentrated in just a few hands, or is it a bit more evenly distributed throughout the Earth's crust?
Sure. So, for the last 6 years, I've been doing what I do at the moment at the World Platinum Investment Council, and that's to help investors make informed investment decisions if they're considering platinum as an asset. We also work with partners to try to make investment products available. But in terms of explaining this over time, the problem with platinum is that when you mention that something has a unique feature, or two or three, that's interesting. Once you get to 4 unique features, people's eyes tend to glaze over and they say, okay, we've heard all this before. But the fascinating thing about platinum is that at the moment, well over 70% comes from a very small geographical area of Southern Africa, namely South Africa and Zimbabwe. And at the moment, the known deposits of platinum in that region can probably support 100 years of current production levels. So there's no need to find more. You've got a mother lode. Fortunately, when mining companies were doing well a couple of decades ago, Anglo-American particularly scoured the earth, and they found a little bit of platinum in the Sichuan province in China, nothing in Australia, and they certainly found a little bit in deposits near the Arctic Circle, and you've got a few palladium deposits in North America. But the mother lode really is in that Southern Africa deposit. Obviously, the Russian production comes as a byproduct from nickel production. So Norilsk Nickel produces nickel as their main product, and they produce a lot more palladium than platinum, only maybe 10% of the platinum market, but probably a much higher percentage of the palladium market. So in terms of palladium, Russia's a big player, but it's as a byproduct. And certainly what the palladium price has done in doubling again, and going basically from $300 to $3,000, we've seen no more palladium supply come on stream because it's a byproduct. So that sort of almost sets that apart. In terms of platinum, the Southern African producers have always been predominantly platinum producers, even though their current revenues from palladium and rhodium are off the charts. They've all done extremely well. So in terms of dominant production, certainly Southern Africa as a primary producer, and those investment decisions to grow production come mainly based on platinum, despite what's going on at the moment. And I think the unique aspect is that if we look back 3 or 4 years ago, those platinum producers in South Africa were losing money. So only with the massive price increase of palladium and rhodium have they gone from fairly chunky debt to cash. The share prices have performed particularly well. So I think the key is that South Africa has been able to increase its output. Certainly, it grew up to 2006 based on European use of diesel vehicles. And I certainly think with the certainty around policy regarding the hydrogen economy, particularly from the US and China, that policy certainty will give South Africa the courage to again grow that output to meet future demand. Again, sorry for the long answer, I hope it puts it into context, Shae.
No, it's fantastic context, because I'm actually going to pick your brain about the future uses for platinum and their links to hydrogen further down the road. Now, one thing that we noticed last year with platinum is that were there supply constraints in 2020? Now, the reason why I ask this is if you go through the quarterly reports for 2021, there seems to be a significant jump in the amount of platinum coming out of the ground. So was platinum supply impacted by 2020?
Absolutely, yes. So in 2020, obviously, COVID caused pain for everybody. And the impact on South African mining operations due to reducing the risk of infection was quite severe. The mines were shut down for a period, and obviously that had an impact. So because of COVID, of that, just sort of 4.4 million ounces that's produced out of Southern Africa, well, out of South Africa, about 300,000 or 400,000 ounces of production was lost due to COVID disruption. What also happened in 2020, completely unrelated to COVID and quite coincidentally, the Anglo-American platinum operations, they've got 4 smelters, but all 4 of their smelters feed through a single plant called a converter plant. It's basically a nickel smelter that they take the precious metal slag off. And they have typically 2 units, the converter units that get rid of sulfur. And they usually run 1 unit and have 1 unit as a standby. And last year in March, both units went down for 2 months. And that meant that the largest producer in Southern Africa couldn't produce refined metal. And the impact of that, and they got the 1 unit up and running, they rebuilt it completely. And then they had another failure in November. So they had 2 periods where both of those units were out. And that lost well over 600,000 ounces. So what you had is that in the COVID year, you lost about 1 million ounces of production. So what we've seen this year is production has bounced back by about 1 million ounces. And what people have assumed is that we're over COVID and South Africa is producing platinum just, fine and dandy. But what really happened is that outage from that converter plant built up about 500,000 ounces of platinum. And about 300,000 of those are being processed this year and another 200,000 next year. What that means is that although platinum has bounced back 1 million, 300,000 of that is just the backlog from a plant outage last year, which means that the actual mining output this year is well below 2019 levels. And I think that's been missed slightly. And when people look out further, a lot of people looking, as you might say, Shae, a lot of your audience might look at platinum for the very first time, and you might think that production's fine and bounced back. But when you strip that out, what it means is that probably by the end of next year, you've got a level that's lower than 2019. And why we can say that with a degree of certainty, and we certainly don't speak on behalf of the people that fund us, is that both Sibanye-Stillwater and Anglo-American Platinum, the 2 large producers, when they published their results in February, said that as a result of investment over the last 10 years being pretty tight because of low margins, they need at least 3 to 4 years to increase production. So they're seeing flat production for the next 3 to 4 years. And what we've also seen is that in order to approve projects, announce them, and start spending capital, the lead time to get any meaningful production, anything more than 100,000 ounces a year, is probably about 4 years away. So you've got a situation in platinum that makes it very attractive from an investment point of view, that you've got a very flat supply line out for the next 3 to 4 years. And that suddenly says, well, with flat or even maybe declining supply line, what on earth is going on with demand? So that's where we really sit. And that, what happened in South Africa is both labor inflation was always higher than CPI, and certainly the cost of electricity and availability of it added insult to injury there. So that's why you've seen the margins decline over the last 10 years. So certainly constrained supply.
That's it's actually going to derail what I did have planned for my next question, because what you're talking about is you're basically saying that supply has shrunk, even though it looks on paper like everything's getting back to normal, but you're actually pointing out that supply has shrunk. Now, this has come at a time when the platinum price has actually fallen quite significantly over the past 12 months. So that's interesting. It could be that the price has fallen at a time when investors are taking a short-term view as opposed to a long-term view, that the fact that there isn't enough platinum to meet projected demand going over the next couple of years.
Yeah, fascinating. So, and I suppose why we've highlighted exactly what happened with supply is that at first glance, the assumption is, well, supply's back and price is weak. Well, that kind of makes sense. So maybe it's a little oversupplied. So when we look at our investor audience, what we've tried over the last 6 years is to get more funds around the world to consider platinum as an asset class. And a lot of them had a look at it and said, we're not quite ready yet because it doesn't seem to be a catalyst that will change both its discount to gold and discount to palladium just yet. So we tend to look at people that own the platinum ETF as those that tend to take positions of a year or two, sometimes even 3, large South African funds are very long the metal as well as the equities. But for example, in 2019, we had more than 1 million ounces go into the platinum ETF. And those were funds that were taking a view based on the fact that they know that supply is constrained, a lot of South African funds, and they certainly can see demand growth for a whole bunch of reasons. And they've taken long-term positions and they're sitting there. Then last year, we had an additional 500,000 ounces going to ETFs, but that included 800,000 ounces of growth from North America and Europe and 300,000 ounces of selling out of South Africa. And that's a healthy market. You get people selling for different reasons, rand-based versus dollar-based versus euro-based. So we see it as a very healthy market, but very strong interest from a lot of funds that are taking a slightly longer-term view. Then you turn to the short-term price, and what we do know is the short-term price is very strongly correlated to movements in the NYMEX futures market. And if you look at that, as well as I mentioned earlier, strongly correlated to gold. So what we saw earlier in the year when there were concerns about economic growth in China and in the world post-COVID, the concerns about China reflected on all industrial metals. So you had aluminium, copper, nickel all taking a big thump, and so did platinum. Interestingly, the commentating from platinum quarters says platinum's down because of oversupply and fewer vehicles being produced, when in fact it was almost a bit of contagion. And I think more recently we've seen exactly the same thing, that markets have taken a hit for a whole bunch of macro issues, and platinum's taken itself down, palladium and rhodium have come off. But I think the fundamentals, and one of the strong underpins, certainly for palladium, and we're seeing it as a growing dynamic for platinum, is that the Chinese automakers, the Chinese vehicle market is huge, and they are unable to have forward books. So most of the automakers in China are state-owned joint ventures. You can't have a forward book because the price goes against you. It's almost a crime against the state. So what they do is they buy in the spot market for near-term use. And we saw in 2019, and certainly during the initial COVID shutdown in China, that the palladium price collapsed as long positions on the futures markets went down. But that palladium price bounced back almost instantly with zero positioning on the futures market. And that was over a 14-day period that the Chinese automakers were shut down. So we know there's a strong correlation and a good underpin. And the thing that's coming through with platinum is that there's more platinum in heavy-duty vehicles in China, and China 6 for passenger vehicles and 6 Roman numerals V1 for heavy-duty are all applicable this year. So you've got this unusual situation where short-term moves can be very strongly macro-driven, and the most recent one very strongly gold-driven. So, you've spoken to gold commentators, Rick Rule certainly, about what drove that down, and certainly that moved down to platinum down. So I think from a short-term price perspective, any investor considering platinum, be aware macro events, gold and industrial metals will create platinum price volatility. But if you're looking at a slightly longer term, we do know that demand growth with constrained supply, and certainly the hydrogen economy has changed the face of platinum quite considerably.
Look, I'll be honest, it's some fantastic insight there, pointing out the correlation to Chinese automakers, but that they're near-term traders and they're not forward hedging. That's interesting because I didn't know that. I'm going to circle back to something you said. It's quite interesting. You talked about there seem, we're not talking about a large market here. You mentioned there's 8 million ounces of platinum, but you talk some large numbers about, over a million ounces of platinum coming out and being siphoned into ETFs. How does that impact inventories and stockpiles around the world of platinum that are being used for industrial purposes?
So it's fascinating. So when we launched in 2014, tried our best to put in a line item called above ground stocks. And what we know is that prior to 2007, there were no ETFs. And if you look at Johnson Matthey, who's the largest fabricator of platinum going back to 1975, they used to publish twice a year an annual supply-demand balance, sort of looking backwards. And the market functioned pretty well. You can pretty get a good idea of what's produced. And it takes a lot of effort, but you can work out where palladium is used to within 100 or 200,000 ounces accuracy. So if you look at what was going on, is that when there was a deficit, the prices tended to be strong, and when there was a surplus, the prices tended to be weak. And Johnson Matthey called those sort of differences between supply and demand movements in stock rather than a surplus or a deficit. So we know that the market always cleared, and that metal was typically held by, in fact, when I was selling the Anglo Platinum ordinary equity into the US, I came across about 19 US East Coast hedge funds prior to ETFs that if they wanted to take a position in platinum, they bought large bars, put them in a vault and paid vaulting charges. And some of them had a 200,000 or 300,000 ounce open position. And they slept very well at night because they bought them at about $600 an ounce and held them all the way up to $1,800. And that's really what confused the market hugely. In 2014, we had, 2013, we had a massive deficit in the platinum market, so 700,000 ounces, and the price went down. And everybody said that just doesn't make sense. And then the next year, there was another big deficit and a 4-month strike, and the price went down again. And that was pretty confusing. And all that was happening is those US East Coast hedge funds, it wasn't on their 13F filings, and they were selling platinum because they'd seen diesel vehicles in Europe peak, and they were selling them into a genuine deficit, but that flow wasn't visible. So because of that distortion, and then the following year, Dieselgate, people attached diesel vehicles to platinum, you've had since then a continuous string of negative sentiment that's pushed this price both below gold and held it below palladium. So interesting that you've got this sort of distortion in the markets, yet the fundamentals are pretty strong. So I think where we go from here is that you've got a situation where the fundamentals are just as compelling. The negative news flow continues, however. I don't know if that sort of puts that into context a little better, Shae.
No, it's fantastic. So given that the platinum is actually in tight supply in the industrial sector, how important is the secondary market in filling that supply gap?
So certainly, recycle from used vehicle catalysts is very important, and that's grown from nothing to about 2 million. And that, fascinatingly, isn't price elastic. A lot of people think if the price goes up, you'll get more recycled supply, and it really isn't, because it's a very mature market. Every catalyst from a used vehicle is competed for and recycled. So that flow is almost an actuarial calculation of what the loadings were on the vehicles 14 to 20 years ago when they were manufactured. So it's important, but it's not flexible. So with a situation of short supply, what we've also seen in this year is huge imports into China that as yet don't reflect in the supply-demand data. So the imports into China in the first 7 months were a record ever, and they certainly exceed the levels of explained demand into automotive, industrial, jewelry, and investment in China. So we think extra buying in China by industrial users, and we haven't touched on industrial, but there's been massive growth in the production of glass, lots of chemicals, paraxylene, nitric acid for fertilizers. And those capacity additions make a huge difference to industrial demand and are driving demand. So we believe that some industrial users and some jewelry users in China have typically increased stocks based on their concerns about shortage of supply, and increase that level. And we should be able to explain that hopefully over the next several months. And what we've seen is the lease rate of platinum spiked, particularly from levels, 3 years before COVID, the platinum lease rate set at about 0.1%. In August, we saw that spike to over 2%, 2.3, and it settled down at 1.3. So they don't look like big numbers, but they're massive. So what we believe, we've also seen draws out of the NYMEX stocks, people using a future to take delivery for metal. So that suggests this market is far from in surplus. And those things are starting to just pick up the interest of a lot of investors and reflect that this market's probably a lot tighter than news flow would suggest.
Let's break down demand for platinum. So we've touched on industrial and we've touched on vehicle use, but what is the current biggest demand on platinum, and what do you think the biggest future demand could be for platinum?
Okay, so I think automotive, so the four demand segments are automotive, industrial, jewelry, and investment. And probably the reason we exist is that about 30 years ago, the platinum miners in South Africa started a company called the PGI, the Platinum Guild International. And their brief was to create a global market for platinum jewelry. And interestingly, that took platinum jewelry from almost nothing to 3 million ounces a year out of an 8 million ounce market. So for a primary mining company to affect a commodity demand outcome to that extent is just unprecedented and quite remarkable. And in 2014, our member companies were really struggling, losing money. And what they thought was if they made it somebody's day job to try and increase the amount of platinum held as an investment, that would certainly strengthen demand and give them the courage to invest in long-term high capital mines. So that's why they put us in place. So in terms of investment, it was always around 1 or 2 or 3%. And last year we had this record of nearly 15% at 1.5 million ounces. In terms of where growth is coming from, I think automotive is probably the strongest. There's probably going to be a longer transition period between internal combustion engines and electrified vehicles. And that transition period really needs to be the most CO2 efficient possible. So I don't think all the political posturing to ban internal combustion engines holds any water. It'll have to be a transition. And what they really need to focus on is a low carbon dioxide emitting transition. And that means both diesel and gasoline hybrid vehicles are likely to dominate that transition. So platinum benefits both from being in those vehicles, both from a substitution for palladium point of view, as well as diesel vehicles. And certainly the electrification means that fuel cell is likely to be dominant. So the hydrogen economy really 3 years ago was probably seen as a science project, whereas today it's recognized as almost essential and happening. And really, if you take renewable energy from solar or wind, you electrolyze water to make hydrogen or green hydrogen, and you put that hydrogen into a fuel cell vehicle, that process is fossil fuel free. So I think the debate then has been, well, what about green hydrogen? Most hydrogen today comes from natural gas, and it's also a fossil fuel, so you're not really doing anything. But the issue is that the route I've explained, you can decarbonize. Whereas with battery electric vehicles, you're just moving the emissions from the tailpipe to the power station. So unless you've got capacity for more renewables, a battery vehicle isn't actually green. So I think hydrogen also helps increase the amount of renewable production and certainly allows that transition. So to the point you're making about growth, I've explained we've got constrained supply. The biggest growth will be the substitution for palladium, adding over 1.5 million ounces a year in 4 years. So that's one to watch. There's probably going to be more hybrid vehicles during that transition from internal combustion to electric. And then heavy-duty fuel cell vehicles, particularly in China, will give us some short-term demand. And yeah, an extra 3 million ounces a year from passenger vehicles in 10 years' time. Not too interesting for investors, but a very comfortable underpin. And then lastly, investment demand, Shae, is that a lot of investors that we've made a compelling case to over the last while, have had a look again at platinum when they've joined the dots and realizes that platinum is strategic in the hydrogen economy, both because its electrolyzers produce green hydrogen, and that's only a few hundred thousand ounces, and there's this longer term price coming. But when they look at platinum, because of that issue around the hydrogen economy, what they instantly see is constrained supply, short-term demand growth from substitution, and in addition, the importance of that transition related to the hydrogen economy and electrification. So I think we're going to see strong demand growth. Industrial will continue because of capacity needs. Certainly that substitution and strong investment demand together with a tight supply seems to be where we're going. So our view is that we don't forecast price, but we certainly believe that there's no reason why platinum should still be at a discount to gold, and that could unravel quite quickly. And equally, platinum should move towards the price of palladium, perhaps rather than the other way around. So quite an interesting space. What we try to do is a new investor, and any of your audience, Shae, our research is free. We're happy to talk to anybody. We try to hold an investor's hand to say, we think there's enough information here for you to make informed decisions. We'll try and provide it and make sure that there's investment products. So happy to engage anyone that wants to take that path with us.
That's fantastic, Trevor. I've got to say, you've made a pretty compelling case for investing in platinum today. And our call happens to happen just so. I was in the ABC Bullion Melbourne office today, and I was actually able to play with some of our new minted platinum bars. And it is a beautiful metal to hold in your hands. Now, we're almost out of time today, but I do have one final question. What is the most important thing investors should know about platinum right now?
I suppose I've got a link to one is it's undervalued, and two, it'll be volatile. So, have a good look, see if it suits your portfolio, either as a diversifier, as a proxy for gold, because it's kind of hard to get your head around gold at the best of times. But platinum makes a little more sense, and it's got a nice, strong, precious underpin. It also has that China underpin that I mentioned. And certainly, yes, undervalued indeed, but you've got to be able to tolerate a bit of volatility associated with macro news flow and misinterpretation. I think, as we spoke, people might look at the bounce back in supply out of context. That needs a little more examination. So we think it's certainly worth having a look at. And thank you for the opportunity to speak about it, Shae.
No worries. Look, Trevor, thank you very much. That's all we've got time for. Thanks for joining me from the UK.
It's my pleasure indeed. Thank you.